Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. I'll interject my financial opinions as we go, generally related to three different topics: wealth building, commodities, and or financial topics. So let's dive right in. Let's take a look and see what people are sharing. If you want to follow me, it's at finding_finance. And if you want to join our community, finding-value.com, where I dive deeper into these topics, deeper into individual companies, how to play this bull market that we are in for commodities, and figuring out ideas of how to maintain and increase our purchasing power against this ravage inflation. We still have a discount coupon code going on, May Day, MAYDAY, if you're interested in joining. So I posted up a bunch of different ratios. I haven't gone over the ratios for a while. One of the tricks that I use is I use ratios to identify what's cheap. It is an asset divided by an asset compared to history. We're going to look at this and we're going to look at some assets compared to history and make some conclusions of what's cheap and what's expensive today, what was cheap and expensive in history, and show you the power of using ratios when you look at it from a dollar perspective. Sorry, guys. So we can look at the precious metals gains. We can do that. And we can also look at the dollar gains to give you guys an idea of how well these ratio methods work. And I do deploy this in absolutely everything that I do when investing. So platinum ratios against other precious metals. And this is history, and I just put these buy platinum areas and buy gold areas. The top of the line is roughly at 1 is where I put it, and the top up here is roughly 1.8. Obviously, you want to buy it as cheap as you can, and you want to sell as expensive as you can if you're a platinum owner. If you're a gold owner, you want to buy it with the highest ratio possible and sell it at the lowest ratio possible and swap your metals into the favorable asset that is cheap. So when looking at this chart and looking at history back to 1986, we are at an incredibly low level for platinum in relationship to gold, which is absolutely fantastic entry point for platinum. We can also see we were expensive last commodity bull market for platinum in the year about 2000 and 2008, where platinum was about 2.2. So 1 ounce of platinum could buy 2.2 ounces of gold. Right now, we're at 0.4. So 1 ounce of platinum can only buy 0.4. So if you were to do the math, and we'll just do an easy one, if you had purchased gold at a 1-to-2 ratio, where 1 ounce of platinum could buy 2 ounces of gold, you buy gold here, and then you swap your gold for platinum down at, let's just say 0.5, which is slightly higher than where we are today, you would get 2 divided by 0.5 is 4 times your metal. So rather than buying platinum here, if you had known that gold is a better buy in this area, you'd buy a bunch of gold, you could swap it down here, and you would have essentially gotten 4 times your metals in terms of platinum buying gold at 2008. So that's what the power of this. You can really start to increase your purchasing power against other metals using this ratio. So platinum right now, we are still on the cheap side. We're not as cheap as we used to be against palladium. Our buy palladium zone is up at the top. Our buy platinum zones are at the bottom. And what I did is I purchased palladium back in this region here. I bought it in 2005 and 2009 when it crashed. And I held it all the way down, and I exchanged all of my palladium to platinum right here in April of 2020. We had that crash, and I waited for the bounce, and I just swapped everything I had for platinum. So I purchased my palladium, and I'll just give you a rough, idea. Let's just say it's 5. It was probably a little bit below that, but it's easy math. So 5, and I transferred it at 0.35, but let's just use 0.5 for the sake of easy math. So if it's 5 and you divide it by 0.5, that means when I purchased my palladium here, rather than buying platinum, I purchased 10 times more platinum when I traded it down here for that trade into platinum. And notice that platinum is cheap against palladium, and it was also cheap against gold, the last one we just looked at. Here's platinum versus silver, and I know a lot of people talk about silver being the cheapest metal out there, or cheapest asset, and I would argue that platinum is the cheapest down here. This is your buy silver zone up at the top. This is buy platinum, and we are very low against silver for platinum. We're at a 1:33 ratio, which means 1 ounce of platinum can buy only 33 ounces of silver. At the peaks up here, we were above 1 ounce of platinum buying over 130 ounces of silver. So buying silver up here, writing it down and swapping it for platinum, and I am not saying that I'm going to do that necessarily. I could, though, do the swap and get a bunch of platinum down here at the bottom. I do own a mixture of my portfolio in silver and platinum at this time. And this is rhodium, and I know a lot of people don't know much about rhodium. Rhodium is another precious metal. It's part of the group platinum group metals. And it usually gets mined with the platinum group metals. So you get rhodium, palladium, and platinum. Here is the buy rhodium zone, and here's the buy platinum zone, and we're in the thick of the buy platinum zone. It's not as cheap as it was in 21, 22, 23 when rhodium was peaking out. Rhodium definitely had a pretty big pullback, which provided platinum that outperformance. But rhodium in 2016 was a steal here, guys. Absolute steal, and I'll show you what that looks like later on. So platinum right now is the cheapest metal against all of the precious metals. And it looks like to me that platinum is about to outperform rhodium. I think we're bottoming right where we're at in silver, but hasn't turned up yet. It's in a falling wedge and looks beautiful. Platinum versus palladium, that's turned up in favor of platinum. And then for gold, it's trying to put in a bottom, I think. I think it could potentially bottom and start to outperform after we get the slowdown in the market. When that yield curve uninverts and then we start to go again, I think that's when platinum is really going to rip it. Looking at palladium ratios, so we're gonna price everything in palladium. I didn't put those buy zones on these. So at the top, platinum is cheap. At the bottom, palladium is cheap. So we can notice there are stark areas where palladium was super cheap, like the 80s, 90s, 2005, 2009. And then platinum was cheap in 2000 and also in basically where we were today, 2019 to 2024, and then it's come on back in later 2024. Let's just say 2023. So that is favorable for platinum right now, and it's moving in a way that is outperforming for platinum. Palladium versus silver. This is a buy silver zone, buy palladium's down here, and we're getting back into the buy palladium zone where silver has definitely outperformed platinum or palladium. But I don't think we've bottomed yet. I think silver is going to run against palladium and bring this ratio even further to the downside. So again, the market conditions are what determine these movements, and I still think that we have a silver outperformance in the short term. And then we've got palladium versus gold. Again, we're starting to go back into that buy palladium zone. We definitely had a buy gold zone in 2000. Gold was the purchase in 2000, same with silver. And we've come all the way back down into the buy palladium zone, but I don't think we've bottomed yet. I think we're going to need different market conditions, and I think it's prime for gold and silver to continue to outperform. And then buy rhodium and buy palladium at the bottom here. We're definitely at buy palladium when comparing against rhodium. So palladium is getting cheap against rhodium, gold, silver, and even platinum. It's not quite as cheap. Platinum would be the buy, in my opinion, for that. And then let's go against rhodium to show you guys some stuff. So this is rhodium versus platinum, complete and utter entry point in 2016 here. This area right in this, where my circle is, that double bottom, perfect entry point for rhodium, huge outperformance. And then we got really cheap for platinum up here in 2021. Rhodium versus palladium. Rhodium was cheap in 2016, 2017. That was the time to buy rhodium and then ride it all the way on up. And to me, it looks like this is doing a back test against palladium. It could still work its way on higher. It's just doing a retest. Rhodium versus silver, clear double bottom here and a cheap spot in 2016. 2016 was the best time to buy rhodium when looking at these ratio charts. We ripped it all the way up, but we've come on back, and it does look like silver is outperforming, and silver would have been a great purchase up here versus rhodium. And then rhodium versus gold, again, it was cheap in 2016 and 2017 here. That was your entry point for rhodium, and riding it all the way up, and then swapping your metals somewhere in this region up here into another metal. And you'd have to kind of look to see what was cheap against all the other metals at this spot. In my opinion, it would have been platinum. Would have been the good one to go into. But you could have also argued in 2020-ish or somewhere even 2021 that silver could have been another good purchase here too. So what does that mean? It was cheap in 2016. I just want to pull up rhodium chart. What does that mean in dollar terms? So you guys can have an idea of what that actually means. So if we were to go and I were to put 2016, so 2016, I'll put the price label here. In 2016, it was about right there. We were at this. So rhodium wasn't priced here. I'm using the physical rhodium tracker here. It was $59, roughly speaking, for this rhodium price here in 2016. Depending on where it is, let's just say $70 right there. And then if I put another one at the peak here, it was $2,504 was the ultimate peak. So in dollar terms, using the ratios, and I'm not saying that we could have gotten the bottom and the top, but I think we can get close to both of those. 2,504 divided by $70 is a 35 times your money. 35 times, at least for this tracker here. And I actually think that it could have been more for the actual physical metal, because I think it went from $650 to $29,000. So 29,000 divided by 650 is a 44x. So yeah, it's around that time frame. Let's just look at palladium too. I want to show you guys. Keep in mind, it was cheap in 2005 and 2009. So if I were to put those tickers there, so it was cheap in $194, and then here, 208. So 194 and 208, and then it peaked at, and I'm not saying that you can get the ultimate peak, but it peaked right at 2,946 in terms of dollars. So when we look at this, if I just took 2946 divided by 200, because that's roughly where it was, it's a 14 times your money. 14 times. And this is just physical metals. This is not really taking on any sort of risk with a lot of the companies. So that was 14 times, and the other one was like 30 times plus, depending on where you could buy it and where you could sell it. Now, I'm not stating that you can buy the exact bottom, but you can get pretty close. And I'm sure you could have got over $2,200 or even $2,000 in this general area up in this range here. It's a pretty high likelihood you could have got somewhere in that range there. I sold mine in April of 2020, so it was like here when I was doing my transactions, just an FYI. That's what I could do. And then looking back, gold was really cheap in 2000 when looking at all those ratios. And look what we had for this. We have confluence. 2000 was right in this dead period here. That was a perfect time to buy gold, and that moved higher. So that went from 257 to, let's say $1,800-$1,900. Huge move there. Silver was another one that was coming up on the radar in the 2000-ish area. So in this area here, you could have purchased at $4 and then tried to exit above 40 if you were brave enough in that move there. So the ratios work incredibly well if you guys are looking at other ideas of how to play this. And that is kind of the ratio game. And that's something I do teach on the website. It's things that I look at, and you guys can see what I'm purchasing as I go along. So here's some quotes, investment wisdom from Peter Lynch and Jason. The skittish investor, no matter how intelligent, is always susceptible to getting flushed out of the market by the brush beaters of doom. Another quote, the intelligent investor is a realist who sells to optimists and buys from pessimists. Some quotes, and here's Warren Buffett. It's an easy game if you can control your emotions. And what I'm kind of seeing with a lot of these quotes that I'm going over all the time, they talk a lot about psychology and emotions. And I think that's really what people need is they basically need to be an emotional or an emotionless robot. Because your emotions seem to screw up everything. Stick with logic, stick with ratios, stick with what's cheap. And then you have to be, it's like watching paint dry after that. And then you kind of have to disconnect from your emotions and just ride through it until it becomes expensive. Accidentally Retired says, most millionaires don't drive fancy cars. Most millionaires don't eat out every night. Most millionaires don't spend frivolously. Don't be fooled by the Joneses. Well, I can tell you what I do. I drive junky cars. Not all of them, but my dailies are junk. And I hardly ever eat out. And if someone were to ask, if you were to ask anybody and say, hey, does this guy have money, just by looking at how I live and what I drive and what I own, most people would say no, just by looking at me. You could not tell by the clothes I wear, by the car I drive, by anything. And that would go for, I would say, just about everyone that I know that has money, outside of a small handful. What's the largest position in your portfolio currently? All I'll say is my largest positions are all in energy at this time. And I think that could change in the future where precious metals mining companies could be some of my largest holdings in the future. Maybe. But right now it's energy is where I dominate, and most of them are oil and gas. I have one uranium position that's pretty big that grew from 2020 forward. What is the best piece of advice you have for someone hoping to enter the stock market? Well, I think you have to do a lot of learning before entering. But my biggest piece would be try to find someone who knows their way around the stock market and learn from them. That's my biggest piece of advice, is to go find someone and learn from them. Learn as much as you can, figure it out, because it's going to accelerate your development to becoming a better investor way faster than trying to do it by yourself. The problem is, who knows the markets that well? And that's where it becomes difficult, because I don't think a lot of people know the market that well. I think it's a very small handful, and I think that it takes a rare breed of someone who's pretty smart but also has emotional control. Because if you don't have either one of those, they'll probably leave the markets and never come back. And everyone else just they do the diversification approach, where they just try to buy and diversify because they don't know the market conditions. And then they try to hedge themselves, which ends up just giving you kind of lukewarm at best returns of like 6, 7, 8% or something like that. Joseph Brown says, do you know how many millionaires there are in the United States? There's 24 million millionaires. 39% of all millionaires on Earth are American. Millionaires make up 99% of the U.S. population. The U.S. is not a poor country with some rich people. The U.S. is a very rich country with some poor people, is what his opinions are there. Today's reminder, it says, make money so that you can walk out of the situations you don't like. And I will say that if you make money and you have a certain amount of money, it changes you as a person. It changes your outlooks. It changes your life. And how would that occur? I'll just make up an example here real quick. If you make enough money and you've saved enough money and invested enough money, and I'm not talking about money where you can just quit your job, but I'm just going to say, let's say you saved a good chunk of money. A good chunk of money, let's say it's like $250,000, something like that. What that does is it allows you to be negotiating if you need a job from a situation of strength than weakness. A situation of weakness is when you're desperate and you must take any job that is offered to you. If you've got money and you don't need the job immediately, you can say no. It gives you options. So it is incredibly important, in my opinion, to save and invest enough money to give you options, to give your future self options in case you get put into a bind. And it may change you as a person knowing that you've got that cushion. And then when you have that cushion, you can use that cushion to negotiate a job that you want to do instead of going and taking a job that you have to do and get stuck in it. There are situations that you just might have to leave a job or do something where you need that optionality. And it changes you as a person because then those options, they're going to change your mindset and the things that you could potentially do in the future. And it may even open up options for buying things too, if opportunities come up, like buying a company or a business or something, whatever it is. The Frugal Mogul says, my friend is 40 years old and wants to start a nest egg. He's currently living paycheck to paycheck with $0 in retirement accounts. What would you say to him? His profile is, he's got a household income of $150K. He's married. He's got 3 kids. His biggest expenses are his mortgage at $3,500 and 3 car loans at $1,200. Well, I can tell you what I do. I have 0 car loans. I never had a car loan. I would buy used cars, or I bought a very cheap new car is what I did. And then I rode that thing and I'm still driving it. I bought that back when it was in 2005 that I purchased it. It was like $7,500. It was a Chevrolet Aveo. I bought it brand new with hail damage. It didn't really have bad hail damage. It was barely noticeable at all. But it went through a hailstorm. They got their insurance payment and they liquidated their inventory. So I bought that and I've been driving it the entire time. I still own it. I've done all the repairs myself on it over all these years. I don't have a car loan. This here kills you. Car loans is a really bad thing. So there's a couple of things that I would do. I would learn where the biggest expenses in your life are coming from, and I would eliminate those expenses if possible or reduce them as much as I could. A mortgage at $3,500 is pretty big. I don't know what this dude is doing, but that's a pretty large mortgage. What I would have done is probably not have bought a house if my mortgage was $3,500 or something like that. So what I would have done, or what I did do, is I purchased a home. I put a big down payment down. I have a small mortgage payment. So I have what I try to do is I try to maximize my free cash flow per month. So if I have expenses per month in total of $5,000 with everything, let's just say that's my expenses, and that's $60,000 a year. I try to maximize my income, minimize my expenses. And I'm not saying to just minimize expenses to live a horrible life and be a monk. I'm just saying, try to minimize where you can. Always look for deals on maybe car insurance, home insurance. Look for deals when you're buying things. Don't buy the most convenient thing. Don't go to some store just because it's convenient and buy top dollar price. Look for deals. Always look for deals. Try to pay the least amount. Buy swim trunks in the winter and buy winter hats in the summer or in the spring when they're on sale. That's kind of what I mean by that. And that's what I do. That's exactly how I live and what I do. And I usually eat at home too. I don't really go out and eat much. One, because I don't like doing it. It's a waste of time to me. And 2, I think the food that I eat at home is healthier than going out. Plus, I don't ever have to tip. I don't pay taxes. Taxes are a waste of money too, because if you're buying things, you generally pay tax on it too. So I don't like all that stuff. But again, that's kind of how I live and how I built my nest egg, so to speak. Palladium broke above its multi-year resistance trend line last week, signaling a potential bullish breakout here. Now, remember all those ratios I went over earlier. I said Palladium looks like it was coming into some of the buy zones, and we are getting a breakout here, but that doesn't mean that Palladium will outperform over the next year or two. We could get a breakout here. Palladium could trade sideways, while silver, platinum, do some ridiculous rip to the upside. And I do think that's probably the likely case. Palladium could still go up though, and we could cycle back down in Palladium and do like a big bounce. What advice would you give to someone just starting to contribute to a 401k? Well, I would say contribute at least the minimum that your employer is going to match. And then if you're in a low tax bracket, I would do a Roth 401k contribution. If you make a lot of money and you want to reduce your taxable income, then I would do a pre-tax in a normal 401k where you put money in and reduce your taxable income. So it depends on your tax bracket and how much you'd be paying in taxes and how much you're putting in there. If you're trying to max that thing out, maybe you do a combination of pre-tax money and then Roth 401k post-tax money. The wrap here, it says crude oil, including the SPR, gasoline distillates, says you are here kind of pulling on down on the low end of the inventory levels. Coming on down, we've got a couple of more quotes. You must have the discipline and the temperament to resist your impulses. Human beings have precisely the wrong instincts when it comes to the markets, says Walter. And another one from Peter Lynch says, it's crucial to be able to resist your human nature. Again, all of these quotes are from an emotional control standpoint, discipline, and psychology. And that is a huge aspect of investing. If you want to buy low and you want to sell high, a lot of it deals with your emotions and your psychology, less so than your logic, and then being able to sit and do nothing. Here's the metals weekly price performance. Silver, copper, palladium, and platinum all looking very good. Gold also a strong performer. The weak performers, manganese has just been taking it. Molybdenum, uranium's a little bit down, and everything else is kind of just flat on the week. For rig counts, we are up 4 rigs, so we are consuming 4 more rigs, and they are all in natural gas. Everything else is unchanged. We're at 9, so total rigs are down 95 year over year. And then that's where we're going to end it, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website if you guys need more help on the ratios or you're interested in playing this commodity bull market and what individual companies are out there. But that's what I've got. We'll catch you next time. This is Finding Value.